Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market consolidated above the previous VPOC of 65.5, and at this point, heading into the open, the market is again in a very balanced state. Now, from here, we can still get another attempt to go higher, but we have to keep in mind that the market has moved nearly 100 points in a matter of just two sessions, so we are a bit exhausted here, and there can be some continued consolidation and some continued balancing activity before we make the next directional move, whether it's to the upside or the downside. And at the same time, we are running into more and more resistance from here on out. So on the upside, the range potential could be limited to the 82.5 to 85 initial resistance zone. On the downside, we have key support at 63.5 to 65.5. Now, the expectation for today is primarily a two-sided balance session within the context of a larger time frame upside move with buyers in control. So if we get a pullback to 63.5, 65.5, that's still an area where buyers can be active. And below that, it would start triggering some stops, and it could start bringing that 58.5 to 60.5 zone into play. The main thing we have to look for in the event that the market goes lower is whether the environment really supports the idea of a balance breakdown or a long liquidation type scenario. So for example, if we go down to 63.5 and we make a marginal break of that zone, but the underlying environment is not really supporting a balance breakdown, if there's not really any momentum behind the break below 63.5, then it could simply be a false breakdown attempt, and buyers can still be active at 58.5 to 60.5, and then we can just go right back into the overnight balance. And a similar situation exists on the upside. So if we break out above 78.5 to 80, but we're not doing it on very strong internals and strong momentum, then we can get a false breakout attempt above the overnight range and above yesterday's range, and fail at 82.5, 85, and then just revert right back into the prior day's range. So what we're really looking for in real time is whether the underlying environment really supports the idea of a directional move. Because so far, we've seen the relative volume has been quite light in the overnight session, and if that theme continues, then it's more likely to be a two-sided balance type day. So unless we're seeing strong upside or downside momentum and some unusual strength or weakness on the internals, it's probably going to be more of a two-sided day. So that's going to be the premise that we're working with, unless we see some clear-cut signs that are pointing to the contrary. So if we go down and we break 63.50, but we're doing it on strong downside momentum with some very negative tick values, and the AD is quite weak as well, and the other markets are breaking down and really breaking key support, then we're not just blindly jumping in and fading that price action. We do have to interpret and understand the environment in real time in order to make that call. So below 63.5, watch and see whether the underlying environment really supports the idea of a big move lower. And if it doesn't, then buyers can still be active at 58.5 to 60.5, and it can simply be a false breakdown. Similarly, on the upside, watch and see whether the underlying environment really supports the idea of a strong upside directional move. And also keep in mind that the market has moved nearly 100 points in a matter of 2 days. So it is a bit stretched and exhausted here, and some consolidation is needed. That was an idea that was discussed in yesterday's recap video, and we've seen that consolidation play out in the overnight session, but that theme can still continue, especially if the volume remains light. There's also no major economic catalyst that can really trigger another big directional move. So today could be the type of market where we go up into resistance, we find responsive sellers, we go down into support, we find responsive buyers, and not really a whole lot takes place. So unless we're seeing some pretty clear signs that are pointing to sustained directional movement, which would be a very skewed advanced decline line, a very skewed NYC tick pointing to sustained momentum, then we have to be careful initiating trades that are continuation type trades at aggressive prices, right? So an example of that would be shorting 63.50, for example, expecting big continuation. If the environment is not really supporting that idea and the volume is quite light, then that could be a trap. So right now, the main setups that we're going to focus on are primarily fade setups. Or if there is momentum in the market, then perhaps we can consider, continuation as long as we are getting involved early in the move. We don't want to get involved after the market's already moved, 6 to 8 points, and now it could be short-term exhausted heading into a support or resistance zone. Then it's better to wait and try to secure a better location. So, given this environment, given the context that we're currently in, you have to be a little bit more patient with the entries and not really jump the gun. Wait for the market to reach a support or resistance zone. Wait for it to give you a decent enough price where at least you have some short-term edge, which will give you some time to figure out whether that trade is really the trade that you want to be in, instead of being overly aggressive. This is not really the environment right now where it makes sense to be overly aggressive. After the market's already moved nearly 100 points, that's not really the time to step on the accelerator. So today we are going to be a little bit more conservative, a little bit more patient, a little bit more focus on trade location, and unless we're seeing some signs of clear sustained directional movement, we're going to focus more on fade setups at the key zones rather than trying to play the continuation side. So those are the main ideas heading into the open. Let's see how this overnight balance plays out, and we'll take it from there.